Which stock market sectors are poised to do well now that we're in the fourth quarter? Let's ask Sam Stovall, U.S. equity strategist for S&P Capital IQ. Sam, good to see you once again.
Good to talk to you, Rhonda.
Generally speaking, it seems the fourth quarter tends to be pretty upbeat. We have the annual Santa Claus rally that tends to happen in Q4 and some of the end of the year buying. Do you think this year will be the same?
Well, I think so. It might end up being delayed a little bit because of the presidential election. And this election is also a very special one because neither of the candidates is an incumbent. That's happened 6 times since World War II. And actually, in the full calendar year, the market has declined more than 3% under that kind of a scenario and was up half the time and down half the time. So there's still an awful lot of uncertainty. But once we get beyond November 8th, then Wall Street won't really care who won. They'll just be happy that the uncertainty has dissolved.
Good point. And Sam, one thing we also know is we might actually see finally some decent numbers on the earnings front. You guys have been tracking this, and quite frankly, we've had several down quarters, and things are supposed to turn around here.
Absolutely. We've had at least 5 quarters of negative year-over-year percent changes in the S&P 500 operating earnings. In this third quarter, which is expected to start reporting the second week of October, right now expectations are for almost a 1% decline. However, if you look back over the past 18 quarters, what we have found is that the actual numbers have been better than the initial estimates by 3.5 percentage points. So that would imply that we could be up 2.6%, not down 0.9.
Sam, you have also tracked which sectors typically do well. So as we go into the fourth quarter and see performance of certain sectors, there are some in the past. Infotech, for instance, has done very well in Q4, as well as some consumer stocks. Would you expect similar performance from these groups this time around?
I think that likelihood is certainly out there. First off, we're about to leave the old sell in May period, meaning May through October is usually the more challenging of periods. But November through April, the market's risen on average about 7% versus less than 1.5% from May through October. And it's usually the cyclical sectors that do the best. Ditto for the fourth quarter. All 10 sectors in the S&P have posted average positive price performances, with tech leading the way, followed by other cyclical sectors such as consumer discretionary, financials, and materials. And with us now looking toward 2017, 6 of the 10 sectors are expected to post double-digit increases, again, many of them being on the cyclical side of the ledger.
And Sam, if we look at some other sectors that typically in the fourth quarter, they're still up, but the performance is not as strong as some of these other sectors. Would you also expect those trends to continue? And we'll take a look at that chart at the moment here.
Well, I believe so. Certainly utilities has been among the 2 best performers themselves, and telecom are up more than 15% on a year-to-date basis through September 27th, mainly because of the attractive dividend yields, and yield-starved investors have been gravitating toward this group. However, they're trading at a 30% premium to their average absolute PE over the last 20 years. So I would tend to say that should it look more likely that the Fed will be raising rates before this year is out, we could end up seeing investors gravitate away from these higher yielders and go toward the growth.
Sam Stovall, always a pleasure to see you. Thanks so much, Sam.
My pleasure, Rhonda.
I'm Rhonda Schaffler for The Street.